Hello and welcome to this week's edition of BoI Weekly. I'm Olayemi Odunuga. The fame of the Bank of Industry continues to spread abroad as officials of the 9-month-old Development Bank of Ghana visit the corporate headquarters of the bank in Abuja on a study visit aimed at learning the curves from the 60-year-old Bank of Industry. Beyond disbursement of loans to entrepreneurs who are daily taking their businesses to greater heights, the Bank of Industry, which is regarded as the leading development bank in Africa and Nigeria's biggest, is living up to its name as it offers to support the newly established Development Bank of Ghana. On this week's edition of the program, we bring you details of the study visit by officials of the Development Bank of Ghana, led by its Deputy Chief Executive Officer, Mr. Michael Mensah-Bah. Welcome to the program. The Development Bank of Ghana has an initial $700 million to loan private financial institutions, including CalBank, CBG, GCB, and Fidelity Bank, who in turn will lend to small and medium enterprises. The bank is financed through a consortium of loans from international lenders, including the World Bank contributing $250 million. Other contributors are the European Investment Bank with $170 million, the German state-owned Development Bank with $46.5 million, the African Development Bank $40 million, and the government of Ghana with the largest portfolio of $253 million.
The launch of the Development Bank of Ghana, which is the result of many months and years of hard work by the task force and working group mandated to birth the bank, marks an important milestone in her journey to provide assistance to small and medium enterprises. With long-term loans remaining a barrier to the growth of small and medium enterprises, Ghana desires that a new bank will ease the access to credit and finance for its SMEs, which comprises about 80% of businesses in Ghana, by providing loans with tenors greater than 3 years. An estimated 1 to 2 million SMEs in Ghana are estimated, I believe, to generate some 70% of the GDP. Like in most other African countries, long-term loans remain the major challenge for SMEs in the country. According to Ghana's Finance Minister, Ken Ofori-Atta, only 15% of bank loans are for 5 years or longer, a development which is stifling investment in long-term projects. The Development Bank of Ghana recognizes the crucial role of SMEs in the country's economy and has made it its mission to crystallize their growth. It is for this reason that a delegation of the bank, led by its Deputy Chief Executive, visited the headquarters of the Bank of Industry in Abuja on a study visit.
Okay, I think we can move on away.
With the introductions over, the Managing Director of the Bank of Industry explains the mandate of the bank and how the bank has enjoyed over-subscription each time it approaches the capital market.
Partnering and discussing with fellow DFIs. For me, there are many reasons. One, I actually represent the DFIs in West Africa, with ATFI. I'm the president for West Africa. So this is part of my job, But more importantly for us, is how we can collectively develop our continent. Bank of Industry, we are over 60 years old. We are the largest, the most profitable DFI that we have in Nigeria. Over 60 years, even as a human being, we'll have learned a lot of things.
Absolutely.
There have been a lot of different phases that we have gone through. About 21, 22 years ago, this bank was about to lose its license because of some of lending practices. The non-performing loans were over 90%. So the bank was restructured to see what went wrong, what must we not do, how can we take this bank to the next level. So the BoI you see today was part of that restructuring over 20 years ago. And since that restructuring took place, the bank has become a profitable bank, been able to add value to the economy. In terms of corporate governance, we take it very seriously. because we not only are able to raise money locally, we're able to raise money internationally. And for you to do that, they're going to check every aspect of your practices, the board that you have, the committees that you have, the auditors that you have, the rating that you have, the human resources that you have. Today, in terms of rating, locally, we are AAA. Internationally, we have the same rating as Nigeria, both with Fitch and Moody's. So we're able to raise money, at about the same rate as Nigerian government, the sovereign, raise money. But sometimes we do raise money below the rate that the sovereign raises money, and that's the confidence that the market has in Bank of Industry. As of today, we are dealing with over 60 banks internationally, who have put money into some of our papers. We have gone to the market, we have done syndications, and for the first time this year, we went to the Eurobond market to raise money. Our first international offer was in I think 2018, when we went to the market to do a syndication for $500 million US. And that was successful. It was actually oversubscribed. We raised $750 million US. That was the first one. The second time we went to the market was in March 2020, during the peak of the pandemic. That also talks about the type of structure that we have, because then you're not able to travel. All our works, technical work, due diligence, all of that was done virtually and online. And the idea was to raise about 750 million euros. That also was oversubscribed. We raised €1 billion in March 2020. And then we went to the market again in December 2020, to raise $750 million US. That also was oversubscribed. We raised $1 billion, and then went to the market February of this year. This year has been the most turbulent. I'm sure you know the way the ratings are going, but also our first offer, Eurobond, was successful. The benchmark was 500 million euro. That also was oversubscribed. We raised 750 million euros. As I'm talking to you now, we have just closed another syndication. We expect to complete the first part of it by tomorrow. That will be about €1 billion. So there is no way you can have a bank owned by government do what we are doing without having the corporate governance in place. I'm happy you came with the Ministry of Finance, because our ownership is similar. For BoI, there are two major shareholders: Ministry of Finance in Nigeria and Central Bank of Nigeria. Ministry of Finance owns the bank now about 95%, Central Bank about 5%. That should not be the ratio. The initial ratio was 60-40. But over time, finance had been coming with money, Central Bank didn't come with money, but they came with a lot of support, and they are still looking at bringing additional money to bring them back to the original 40%. So we are also owned by government. So we have similar ownership. From what you have said, our mandates are similar. From what you have said also, we hardly lend directly. About 90% of our lending has been through commercial banks, because we have them as our partners, and that's one of the things that you have to cultivate. These commercial banks we have in Ghana, the merchant banks we have in Ghana, for them to be able to also be like a pipeline of deals for you, and then you have that kind of, it's not a direct thing. And by the time you get into detailed analysis with our people, you will know why there are pros and there are cons. One of the reasons why the old BoI failed was some of this direct lending. If you have direct lending and you have government ownership, it's likely you have influence. There'll be a lot of bad loans, but not able to recover. Because the people who are also owing you will be very people who are influential or in government. So by going through third parties, it forces them to go and borrow, or get guarantees from commercial banks that are owned privately, who will look at the project, professionally before it comes to us. That also saves a bank. In fact, it is one of the major things that you have to ensure that you keep. Because one of the problems, we also have this African development ANTFI meetings, either in Nigeria, other African countries, it is the same problem. Interference, bad debt, political lending that has killed virtually most of the DFIs we have in Africa. But we need them. Because, for instance, now, BoI is a major source of inflow of capital into Nigeria. And that can only continue if the bank is well run, the bank is trusted, the bank is run professionally. So there are more things you lose if your DFIs don't run efficiently and professionally. I've been MD CEO for about 5 years. We brought in about $4 billion by tenure. By the time we finish this week, we will have brought in about $5 billion. How many private investors bring $5 billion to Africa? So we have to keep our institutions. We have to. You are just starting. I understand you went through a rigorous process for recruitment, because I have a lot of friends in Ghana. You have to maintain it. Our head of human resources is here. We try to look for the best that we can get, even though you have pressure, because the quality of staff is very important. Very important. When you look at our annual reports, the profiles of the senior management is there. These are people who can work in any private bank in Nigeria. So it's not that because they work for a government bank, that their CV is not as robust. In fact, the CV of people that are here are more robust than some of the management that you have in some of these commercial banks. So it's deep. Our chairman was a former MD CEO, one of the largest commercial banks in Nigeria, an experienced banker. I have run another bank before, another board member who was also another MD. So on our board alone, there are 3 MDs. So you can't come and bring documents that don't make sense. They understand very quickly. That's another thing. When you have people who don't know what is going on the board, either they approve everything because they don't understand, or they make life difficult for you. But these are people who add value to what we bring. And whatever you are suggesting, they understand it. These are ex-bankers. Even the rep from finance that they gave us is a qualified finance person. On our board, Central Bank is represented. You have a board of 11. 2 people are from Central Bank. 1 is executive, 1 non-exec. So there's oversight. Finance is represented on our board. Then we are being supervised by the Ministry of Industry. In Nigeria, it's MITI, Industry, Trade and Investment. They also have a member on the board. The manufacturers in Nigeria, they have a rep on our board. So out of the 11 members we have on the board, 6 are non-exec. Then we have 5 executives. Like I said, you will see the profile of these guys. So it's very important. You don't have a board that is very ungovernable. For a bank like this, everybody wants to be on the board. So you have a board of 21. Just too many. Enough to be effective, enough to add value, enough not to deplete the resources of the bank.
The leader of the delegation states the reason for the visit, as he also shares the mandate of the Development Bank of Ghana.
The few things about Development Bank Ghana is that I want to mention is one, we are actually licensed by the regulator, and we have our regulator we are regulated by the Bank of Ghana. That's the first thing. The second thing is that we are a wholesale bank, meaning that we don't lend directly to our beneficiaries. We actually lend through the banks. In addition to that, we work with partners. The intention is not to do everything on our own. So we work with various agencies, associations who share the same goals as Development Bank of Ghana. One other key important thing is that we are very strong when it comes to governance. So we've spent quite a lot of time at the initial stage to build a strong governance foundation to ensure that our lending will actually be done in a way that doesn't put us into a lot of trouble. Now, one of the things we're trying to achieve as we continue to build this bank is to learn from people like yourselves or organizations like yourselves who have done it before, who have been able to support the development of private sector. I know it's an area where, coming in, I saw you've put in developing industrialization of Nigeria. So I know that your bank has actually been in a position where you've been able to do what we are trying to do.
With a 60-year-old background, the managing director of the Bank of Industry shares the secret of their survival as he enumerates the facts that have led to the collapse of development banks in other countries.
Now, one of the things that we do in BoI is that, okay, our NPL, part of the covenants we sign with the foreign banks, is that our NPL, non-performing loan, will not exceed 5%. That is tough in an environment where you have COVID ravaging the whole economy. So how we manage that is that we do wholesale, just like you're about to start doing. We pass that money through commercial banks. And we tell them, for your customers that you bring to us, you must guarantee that money. So we always take bank guarantee from commercial banks. So we don't take fully the risk of the market. Technically, the risk you are taking is the risk of the bank. Then the banks now say, look, if you are doing that, we are the one carrying the risk. Why are we in this with you? We're not making money. Now say to them, okay, fine. We, as Bank of Industry, out of our 8%, we will give you 2%. So even out of that 8%, I give 2% back to the commercial bank for carrying my risk technically and providing the guarantee. They on their own, before they provide the guarantee, we charge the customer at least 1%, sometimes 2%. So already they made 4%. But we know that some of these commercial banks are not sincere. They also go and sign a side letter with the customer and say, look, this 2% that BoI is giving us is not enough. Oh. You must pay us another 3%. They don't tell us that, but we know. But even then, if you add everything together, compared to the 25% they will have paid, they will be paying here maybe about 11% or 12%. And we, from the 2% that we are paying, and we have 6% left, yeah, you have 4% margin. 4% margin on volume gives you reasonable income. That's where the pricing comes from.
The desire to place the Development Bank of Ghana on a sound footing is the reason for the study visits to Nigeria. The Deputy Chief Executive speaks on their objective.
So our objective today is to come in and learn from you and look at some of the areas or challenges that you've faced so that Development Bank Ghana will not make the same mistakes that we may have made in the past. And that is the reason why we are here, to learn from you. There are specific areas that we've mentioned here that we want to discuss. We want to talk about areas such as the pricing of your loans. We want to talk about areas such as how you measure your impact. We want to talk about areas, how do you combine profitability with sustainability. We want to spend a bit of time as well understanding your human capital, your human resource, and I'm happy that your human resource lady is here. So those are some of the key areas that we want to discuss with you, and generally take feedback from you. We only just got license. We're not even a year old. I know BoI is almost up to 30 years. If I'm 30 years,
About 60 years.
60 years.
60 years.
All right. So I have a lot. We have a lot to learn from you, and that's why we're here.
With a heart ready to learn, the managing director of the Bank of Industry advises his visitors on what they should avoid as he shares the experience of how the Bank of Industry almost lost its license 2 decades ago.
National Assembly has interest in. Politicians have interest in it. To say, okay, fine. This money that you and people have gotten, we want to develop the whole of Ghana. We don't want the money only in Accra and Tema, and we want it. Yeah, I've been to Ghana. We want it everywhere. So you have a challenge. If you are doing wholesale, you are not the one that disburses the money.
Yeah.
The money is being disbursed by the PFIs. The PFIs will disburse the money in areas where they can recover their money. Most times, between what government wants to do and what PFIs want to do, they are divergent. So what we now need to do is to ask yourself, out of the money we have, is there anyone we want to have a small one to take care of SMEs or particular sectors of the economy that we want to support, and you get government to back you up? We have the same problem. That question they ask me every time, and I tell them I don't control it. They say, how do you don't control it? The money is with you. I say, yes, the money is with me. But the people that give guarantees, they will give guarantee to companies in the areas they think they can pay back. And government say, look, but you want to do everything. I say, okay, fine, government, what you can do, annually, when you are preparing your budget, you can put some money aside for risk and give that to me to lend in those areas that the banks don't want to lend. So when the money is lost, it doesn't appear in my books as NPL, because if it does, you stop me, you stop my ability to be able to raise further money to help everybody. I'm not government, I'm private, but I'm owned by government. So the only way we can work together, give me that money and tell me to lend that money in this place. But don't tell me to go and borrow money and lend in an area I know I might not recover it, because you can only succeed doing that once. You can do that once. If government forces you to go and lend in areas you will not get the money back, government will succeed in 1 year, but they have killed the bank going forward. Nobody will give you money again. And the country will lose as a whole. Because, for instance, now, the 5 billion I have brought in will not come in. Do we need 5 billion in Nigeria? Yes, we need 5 billion in Nigeria. So don't make Bank of Industry do everything. You cannot be everything to everybody.
The study visit climaxes with the exchange of gifts.
Got it.
Thank you very much.
Thank you. Thank you so much.
Before proceeding to a technical session, the Deputy Chief Executive of the Development Bank of Ghana speaks on the visit.
We were licensed last year in November, and our president, His Excellency Nana Addo Dankwa Akufo-Addo, launched the bank June 14 this year. One of the things that we have decided to do is to learn from the best, and Bank of Industry, we believe, is one of the best DFIs in West Africa. So we've come all the way from Ghana to meet with the MD of Bank of Industry and his team, and the meeting was very successful. He has shared some of the experiences that Bank of Industry has had over the many years, 60 years, especially the last 20 years where they had a restructuring, and now the bank is very profitable.
With 60 years experience in development banking, the Bank of Industry no doubt remains a market leader on the African continent.
The Bank of Industry over the years continues to provide interventions for various industries to thrive, and there is absolutely more where that is coming from. So if you're an entrepreneur in need of support to grow your business, you can reach out to the Bank of Industry by visiting any of the branches closest to you or log on to their website at boi.ng. You can also follow the bank on all social media platforms as displayed on your screen. Well, that's it on this week's edition of BoI Weekly. I'm Olaimi Odunuga. Thanks for watching.